Underneath this, you had 285,000 people who came to work every day, 40, 50 million clients who depended on us, tens of thousands of businesses, trading partners, investment banking clients, and they all depended on this company being great because this was the Bank of America. It had a meaningful amount of America involved in it. And so you had to keep focused on that while you're focused on cleaning up and dealing with the issues of the moment.
Welcome to Grey Matter. I'm Declan Kelly, founder, chairman, and CEO of Consello. I've spent the last 30 plus years advising the CEOs who are leading the world's top companies. If there's one thing I've learned in that time, the best leaders think differently. That wiring, that grey matter, separates the truly exceptional leaders from everyone else. Understanding it is what allows us at Consello to help the best in the world be even better. This podcast exists because the most accomplished leaders agreed to sit down and talk about something they rarely discuss publicly: how their minds actually work. When Brian Moynihan became CEO of Bank of America, the country was still reeling from the 2008 financial crisis. Bank of America, with hundreds of thousands of employees and millions of clients, stood at the center of it all. Chosen to lead was Moynihan, a lawyer from Ohio who had worked his way through nearly every division of the firm. His first act was to refocus the business on what it did best. Over the 15 years that followed, he led a digital reinvention that fundamentally changed how the bank served its clients, drove customer satisfaction to record levels, and built an institution that today looks fundamentally different from the one he inherited. Through it all, his steadiness and clear sense of purpose turned one of the most pressured moments in American banking into one of its most consequential periods of transformation. This is Grey Matter. Brian Moynihan, welcome to Grey Matter.
That's great to be here, Declan. Good to see you.
Thanks for taking the time. I was just in your office a little while ago. Thank you for showing me around. And I noticed in the office there's a picture of Churchill. And I couldn't help but think, without comparing you to Churchill, that both of you are models in overcoming adversity and doing things that people thought were not possible to do. What's the relationship with Churchill? What are your thoughts about him? And I know you're a student of history.
I'm a student of American history. I spent a lot of time studying early America, but that picture was actually given to me by a teammate who said, as we were, think of like 2013, 14, we sort of had moved through a lot of work after the financial crisis to clean up the company. He said, you're, again, not comparing you to a person who, was defending Britain to the nth degree in World War II or anything like that, but basically saying, you remind me of him because you can stay calm in times of stress, you focus on the objectives, et cetera. And so he gave it to me. He said, put this in your office. And a lot of people think that I put that in my office. Actually, I put it up on the wall because the fellow gave it to me. As I think about, learn more about Churchill, the admiration is he wasn't always perfect. He made some mistakes. His ability to engage with people, his ability to think bottom up, but they're great lines. One of the things that we do is we do a lot with the arts. And one of the great lines attributed to Churchill, in the height of the bombing, when the red box came in from the exchequer and people said, why are we funding the arts? He said, well, if we're not going to fund the arts, what are we fighting for? And so I've used that to say how important the arts are in times of stress, whether it was in the post-financial crisis or during COVID and other things. You got to keep funding the arts. But that showed the well-roundedness of his thought process, which is it's about society, not about winning a battle. It's about a greater good and a common weal and a way to have allies come together and defeat evil, not about, a single battle, a single airplane, a single bomb and stuff. So he was remarkable that way.
When people ask me about you, I always say 2 or 3 things. 1, honesty. 2, low ego. And 3, an ability to make things that are very complicated very simple. I think it exemplified itself through the way that you were appointed on the 1st of January in 2010 and walked in to handle what was a very, very, very difficult situation. Most people 15 years ago don't remember that. What was it like for you?
Well, the key is underneath this, you had 285,000 people who came to work every day, 40, 50 million clients who depended on us, tens of thousands of businesses, trading partners, investment banking clients, corporate banking. And they all depended on this company being great because this was the Bank of America. It was represented. It had a meaningful amount of America involved in it. And so you had to keep focused on that while you're focused on cleaning up and dealing with the issues of the moment. So I think when that mantle of leadership drops on your shoulder saying you have this 200-plus-year-old institution. You have this institution that carries in its hands the lives of so many people. It's really a weighty matter. On the other hand, you have a talented team, and you say, let's get to work, and let's be pragmatic. We got to solve A before we solve B, before we solve C. We can't be figured out the theoretical. We have to be focused on the pragmatic. And so it was an honor to take over the leadership. It was an honor to have a team that I knew we could depend on. But the big honor was to say, 285,000 people, we can do great things. Let's just go do them and then clean away the crap and go on.
Grew up in Ohio, sixth of eight kids. Your dad was a scientist at DuPont.
Yep.
Your mom was a homemaker who went back to work at 55. And, having grown up in an Irish family, being sixth of eight can't have been easy, but also you learned a lot that made you who you are as a person.
Yep.
What was it like? What was your childhood like growing up? And I know your brothers are doctors and you're committed to Haiti and Africa and all the things you've done as a family.
They're a group of talented people. My parents and my brothers and sisters. It was a big family, but it was close in that we didn't have a lot of extra stuff. So we all took vacations together. Got 10 people in the station wagon, drove up to the lake, so to speak, and things like that. But it was intellectually challenging. I mean, believe me, if you weren't exactly right, you got called out, and other people are very confident they're right. So if you knew they were wrong, you had to artfully figure out how to convince them of that fact, about facts, not about opinions, but about facts. So it was good. It was a lot of fun. You could always get a game going of something, because whether it was a board game or a card game or a sports game, and when they brought relatives or friends or whoever, you always had a crowd. So it was used to be around a lot of people. I never slept in my own room till I was like 22 probably. I always had, even when everybody moved out except for one brother of mine, he moved in with me because he was afraid to be alone, type of thing. So it was a great upbringing, but it was very, intellectually rigorous. And we did everything. We paid the house ourselves and stuff like that. But it was intellectually rigorous because they were also analytically and science oriented. When I grew up, my grandfather was a lawyer. And so, and he was a small town lawyer in upstate New York, a town called Batavia. He became a judge, and he was that kind of lawyer. So he did everything and then saw everything as a judge. My dad's dad was a banker, and my dad's mom was a banker, and they both worked in the same bank, which we now own. It's kind of an interesting story. So he was the cashier treasurer, and she was a teller, so they worked in small towns. But I always grew up thinking I was a good lawyer. But I thought I was going to be a lawyer like F. Lee Bailey was at the time, defending this, or in the great, sort of criminal law out in the 70s, and Perry Mason was on TV, and that's what a lawyer was. And then I went to practice law, and I became a corporate lawyer because there wasn't a lot of opportunity to defend criminals in big law firms, and I needed to get a job in a big law firm east to make some money to pay off my debts. But and so I changed to corporate law more out of pragmatism, and the people who I worked with I liked in the corporate side. But it was the intellectual training, the rigor of being a lawyer, the discipline, the appreciation of precision of word, precision of writing, to have an intellectual argument to get to an answer, being able to challenge that you're wrong or right. Law puts that in your brain no matter what. And many people in business were lawyers. I happened to practice 9 years. It was a little different. A lot of people just went into business. But they all look back and say that training I got for the intellectual curiosity, thinking. And by the way, when a teacher says you got it wrong and just hammers you, that sort of, okay, I got to be able to defend my turf, is a very good training.
I remember reading somewhere about Terry Murray at Fleet when you decided to go there, and you said that meeting sort of changed your life. You're one of very few people who have pivoted from the law to becoming a CEO of a big bank, if not the only one. How difficult was it?
I'd gone to Providence to practice law and got married to my wife, who was also a lawyer. I became a partner. I'm making some decent money. We have our first child. We're living, bought a house, the things that you do at 30-ish years old. And then I'm working a lot with this client called Fleet that Terry runs, and a fellow named Jay Sarles, and Bill Mutterpool is the general counsel. And, Terry told Bill Mutterpool to come talk to me. And he said to Bill, he's too smart to be a lawyer. Why don't you get him in here and we'll have him do something else? It was luck. And you got to have a return on luck. You got to make a decision. So there I am, making good money, have a kid, have a house. I didn't know whether I'd be worth a darn on this other side. I knew what I was going to do because I worked with that client, but you had no idea whether you could make that transition from practicing law with a small group of people to where you'd start managing people. You just had to take the risk. Everybody gets the chances, and I was honored that Terry asked me to do it. And I started. That transition to managing people started with people who were like me, 25, MBAs, business school, business-oriented people doing models and M&A and acquisitions and merger integration. But then it moved to large groups of people. That transaction is actually bigger. It's easy to manage very intellectually driven people because they all sort of feel, the same. When you start to manage people who have different motivations, different ages, people twice your age, that's where you have to start to really think about the science of management.
When you were offered the opportunity to go and run Bank of America, I read somewhere that you went and met the board and brought one page with you at the end of the day that you handed them and said, "This is my strategy for the bank." What was on that page and how much of it actually came true? And who on earth goes into a job that big and hands them one page and pulls it off?
Yeah, well, I think there are two parts to the one page. They knew you knew the company because, frankly, I'd run different divisions, have been around for a while. But the real question the board had to assess is, did you know what to do, and could you get after it fast enough? And a bit the discussion with them was, we have this list of stuff we have to get out of so the good stuff can shine through, and we have to do both at once. And the page you're talking about is all the things I said that weren't core to what we did, that had just come accumulated. Remember, from 2003 fall, when Bank of America announced the deal for Fleet Boston, to January 1, 2009, the day we closed Merrill, we did U.S. Trust, LaSalle Bank, Merrill Lynch, Fleet Boston, MBNA, Countrywide. Just think of how much stuff came in. And so channeling that one piece of paper was, we got to get out all this because it's holding us back, and we got to focus on this. And the board saw it, and they chose me literally 16 years ago. But we came out guns blaring. We knew exactly. So we chopped and channeled this and then took off on that. And it took a little while because, quite frankly, the rules got changed around us by a new administration. Started saying, well, let's reinvent what really happened and hold you accountable for stuff we shouldn't have been held accountable for. That's water to the dam. And we had to get through that. But as we came out of that, but with the board, it was really, we have this great assets. We have to simplify it and run those. And those have to start being successful day one, even though all this other stuff will be the discussion for a while.
People forget because it was so long ago. 15 years is a lifetime in our world now. But, dealing with Countrywide, dealing with the whole Merrill Lynch acquisition, dealing with all the things you had to do. I remember one of the people on the House Investigations Committee said, "I'm not sure you're the right guy to be leading this bank." Well, he was proven right, wasn't he?
He said a little more directly. And actually, subsequent to that, he became a fan because of the work we did in the mortgages in Prince Anne County, or whatever it was in Maryland. And but he lit me up, and Towns and Fairfield, they lit me up, and they lit me up in a way because they wanted to focus our anger on a company. I happened to be the only person. We had two directors and a former employee. I was a person there. That's a lesson. So a lot of people said, you testified in front of Congress. I said I did before I was CEO. And so I got a chance to do it one extra time than my peers because I did it once before I was CEO, and then I've done it CEO. You just had to keep your eye on 285,000 people, millions of clients, top talent, top businesses across all the different dimensions. It's all there. We just have to get all that behind us. And it was an interesting trail because people remember Countrywide, but that wasn't the issue in 2008. It was Merrill had a hold of his balance sheet, and we had to tell them we weren't going to do the deal. And the Fed got mad at us. The Fed said they're going to fire everybody unless you do the deal, and we're going to remove the board management. All these things that people think only have happened, recently. That all happened. They told us they had this. They basically said you got to change the whole board out, and some of the board members stayed, and they changed it out. That happened in 2009 and under my predecessor, and ultimately he left at the end of that year. But there was just massive change. I mean, we were fighting the Countrywide and mortgage and other issues really didn't become more present till you got into 2010, 11, when the delinquencies and things and the foreclosures and modifications and all the programs people tried to put in to mitigate the hurt to individual consumers. That was really later. People forget there's a lot more stuff with Lehman and Merrill and all the different stuff going on in 08 and 09 that we also had to deal with.
Our mutual friend Tom Brady often talks about, in moments of epic importance, how he's able to still his mind and silence and focus and go into a bubble. Take us into your mind at the time. To be you, when you're alone in that moment, when you go home at night, when you have to think about the extremity of what you're dealing with, what was it like to be you just at that moment?
Two things. One, watching Tom for years, and as a Patriots fan, I watched a lot of Tom's success. And you see that in him and other people. The ability that in times when you should be speeding up to slow down.
Right.
What he talks about and what other people talked about him and what you even observed is it seems like the whole game's going slow motion to him and everybody else is running frenetically around him. And I think that aspect, that's to keep calm and carry on from Churchill. I mean, it's the same motive. And so the point I've always said is you can waste a lot of energy, run around in circles, or you can sit there and pull down. And at times of stress, whether it's that kind of stress or whether it's the stress of other types of activity, management's job is to be a sponge, to absorb the energy, absorb the emotion, and just hold it. Not to explain people you ought to feel better, not to explain you ought to feel different, because that's not right. That's what they feel. You have to be able to absorb that. And then the second thing is you have to be like a duck on a pond, going across smoothly across the top. Underneath, you're frenetic and doing stuff. You can never show that because everybody's looking to you to say, well, if he's worried, if the management team's worried, shouldn't we be worried? So you have to calm the place down. And then you have to be true to the purpose of the group. And so in the middle of the mess, I get lots of books sent to me. Book came in and it was, Leading for Purpose in Times of Things. And so you open it up, and like all good business books, you can kind of read the first chapter or two and get it. And, you said, that's a simple statement. We have to tell people why we're here. So we had to make sure that people focused on why we're here, not what to do, because why we're here, we keep them going, even though the what could be changing and have a frenetic pace. So that ability to try to be calm, and people often say that about our management team and me, that, this stuff, and it's not because, you sat there and studied it. It has to a bit be natural, and it has to be the way you think about problems. Is how do you bring the energy down and then get stuff done, and then you can bring the energy up for success, as opposed to having the energy be about the problem.
But you really do focus on, as a person, and also in terms of how you run the bank today, this low to zero ego approach.
Yeah.
I know hundreds of people who work here and work for you. Every single one of them says the same thing. When you introduced the philosophy and the doctrine of responsible growth to fix the company, that was at the center of it, right? Your sort of no-nonsense philosophy.
It's not about the ego. It's about the only way to be successful is to take advantage of the power we have with the 200,000 plus people, not any one of them. There's nothing I can do to lift this company or do something. There's something I can do to help 208,000 people do it, and they can help each other, and they can help. So it's an operational necessity when you're in large-scale organizations, but it's also that, the beauty of a scrum, it's that 8 people coming together that you literally lift their weight off the ground. And it's because of that they're as a team. If any one person gives a little bit, the whole thing goes apart and people get hurt, frankly. And so it's just a miracle thing. So it's not about subordinating your ego or something like that. We all have egos. We all want to be successful and stuff. It's more about the only way to get things done is to activate the collective energy at a level that you can't imagine.
Speaking of that, I think people remember endorsements back in the day, and then we'll talk about the present and the future. Back in the day, Buffett showed up and said, I want to invest in this company. He's not an altruist. He's a hard-nosed investor. But at the end of the day, that was a massive vote of confidence in you. May not have felt like it at the time, but at the end of the day, the sustained investment that he's had in the company and all the various different things that he said about you and the leadership, smartest investor in the history of the world, that must have been gratifying as a vote of confidence by everybody in you and the leadership team.
Yeah. No, it at that time, the U.S. was getting downgraded the first time. The debt, the government was shutting down, a debt ceiling, all these things were going on. The U.S. was out of money, literally. The stock markets were getting banged around. We were getting banged around, specifically because of the litigation risk, which was not near what people said, and et cetera, et cetera. And he called me up and said, I want to put $5 billion in a company. I said, well, we don't need the money. He goes, I know that, I wouldn't be calling. What you need is a vote of confidence. And we knew that. We agreed with that. And that's why we did the deal with him, was as much about the confidence than the capital. The capital was something, but the confidence, the fact that investor said, I will put this money in, and literally in 24 hours later, the deal was done. 285,000 people came back to work the next day and said, the smartest investor in the world believes this company has a lot of upside. Let's go to work. And at $5 and whatever we were at that time to now, you could have bought the common that day and you would have made as much money as he did. Everybody said we got a preferred stock, it got dividends, but matter of fact, he bought the common stock at a 20% premium. So if you bought the common that day, you did fabulously well. And it was just an injection of confidence. And from then on, we've gone from, I think we were $5.70 at the time, $5.70 a share, until they were 55-ish. So it's been okay for him and okay for the shareholder, but it was about confidence. And he's a great investor, and it's, at 95, haven't seen him recently. He's, as curious, as intellectual driven, still wants another big deal. And he always says, bring me an elephant, bring me something big. That's what he challenges for. But he's been a great support for our company. But it came from that observation. This is the best country, the best bank, the best positioned. It's going to work. It may be bumpy, and they need confidence. And here it is. That's what he's told me he did. And then on the other hand, we looked at it, and we actually Now, he came to us. We didn't outreach to him, but believe me, when he came, we had thought about the question. And so the board, we went like that. And the next morning we signed a deal with it. He called at 11 o'clock, and by 8 o'clock the next morning, the deal was done.
When you think about the transformation of the bank, I think one of the things that, again, you haven't talked a lot about, but you've talked about in your investor day and all the other things that you've done recently, the digital transformation of this institution has been quite extraordinary. Yet you're a person who is as predictable as a Swiss clock in the fundamentals of the business and somewhat of a traditionalist, I would say, because you never veer from those principles, as we just talked about. The world is changing so quickly with AI and everything else. The digital AI assistant, everything else that you've done. Where do you see all this going in the future of banking and future of Bank of America as it relates to transformation digitally?
We had the notions in 2011, 12 that we would end up with a lot less branches, a lot less people, and a lot more customers, and it'd all be driven by digital. And that notion comes from 10 or 15 years of practice built up at that time, and even back to computer banking and dial-up internet and everything 30 years. So you saw it coming, but what you really saw is the customers were adopting at a rate. And so from 2010 and out, we have half as many people working in consumer business, and the business is probably twice or three times bigger. And the numbers of transactions are through the roof, and the customer scores are up, by 20 points on a top 2-point scale, and the employee scores. So, and the churn in the business is way down, and the net growth is a lot higher. So it all worked. If I said to people, this is all what's going to happen, first of all, other people would catch on early and be able to imitate it. And secondly, it would sound kind of fanciful. And so that's the principles you have to run at, which is every day you're driving against a very strategic, out there view driven by a lot of talented teammates that come up with it, not me. It's their job. But what you're doing is driving relentlessly. So if you think about what AI does, is it allows a company to change another step that wasn't possible. So if you look at that work and you said 285,000 people to 203,000 people at the low point, and then you back up to about 213, when that first chunk, you went down all those people. Then you invested a lot more in relationship managers and people in the front line, and computer programmers are developing more technology faster. So the actual headcount related to operations and the consumer and stuff kept coming down during that time. It's just you're investing faster. What you won't see is, did you use some tool to change the legal department dramatically? Did you use some tool to change the finance team dramatically? Did you use some tool to change the audit team dramatically? And the answer is no, because the tools, yes, you're always applying models in machine learning and operational process simplification and all this stuff, but what you didn't have is something that can help people think faster. And that's what AI does. And so what we've seen is our audit team has already applied it, and they've been able to build a prompt library, and that prompt library, it can help them start audits faster, and they know they can reduce their headcount. So now we have a tool that will approach other parts of the company differently, which is fabulous. But it still has to have people. It still has to be right. The data has to be right. The process has to be right. The controls have to be right. It's a lot harder than people think. Everybody said, well, I just go on ChatGPT, or I just go on all the other models, and I do some search, and it comes up with an answer. I said, yeah, but you're not making a determination whether a person's going to financially be able to fulfill their dreams and own a house or not. You're not actually making the decision about whether this trading position's going to work out or not. So if you're taking that kind of risk, you have to be a lot more perfectly right. That means the data has to be perfect. That's $3 billion we spend. That means your operational process has to be understood. That's the process and the work we have with 30,000 controls and then you figure out how to engineer the process. And so that's why it's going to be slower. Is it unbelievably different? Yes, because it applies to different places. Is it going to take longer? Yes. Then there's a whole other question about how consumers are going to use it for their day-to-day lives, which we'll be adapting to over time. That's a second order because, frankly, consumers are much slower changing than people think. But this gives the consumer a tool to interface with people through an agent that they didn't have before. So now we have Erica, which is a virtual assistant for our people. Now every person has their own virtual assistant. How that interfaces to a company, that's going to be an interesting question. So there's a lot of work to do. It's got a potential that no other technology so far has had, but I'm sure we said that about every technology has come up, honestly. The predictions that, how this work or that work, there won't be any work, we'll all be sitting around like Bacchus and stuff like that. Yeah, I'm not sure any of that's true, but the reality is that it will have a profound impact. But the question has got to be done right. And the minute you make a mistake, you got to go back to square one. That's what we have to think about, what we challenge ourselves. So We have to get it done right. It has to be perfect on the other side because people won't tolerate imperfections when it comes to what we're doing with them. They will tolerate it if the term paper reference is not quite right. That may not be the best thing for your son or something like that. It's not a life or death thing. Kids get term papers wrong in the old days. It's just. But the question is, if I turn down a home loan or make a mistake and we lose $1 billion on something, those are real issues that we got to make sure we don't do.
You're a huge proponent and advocate for the right and appropriate level of regulation, and you've been, very vocal on that topic. And obviously, having lived through 2008 and all the things that we talked about earlier, do you feel like there's ever a possibility that we could ever have a problem like that again? Do you feel like the markets are now completely regulated in a way that is appropriate as a fail-safe?
The best thing that came out of all that, and Terry Murray used to have a phrase, people enjoy it too much. And that's what started happening in regulation. They just enjoyed it too much. They kept saying, let's do more because it felt good to do that. You're saying, but if you solve the problem, why are you doing more? And that's where the balance got out. And then it's coming back. And by the way, that's U.S., that's the EU, that's everywhere in the world, UK. This all went, and you could understand it from the people in there. The only way to say it would never happen again is just to keep tightening. The problem with that is you are impacting society and economic growth and success and business success and your ability to compete in the world because not everybody's doing that. And so the unlevel playing field, the people who have more state-owned participation as the Chinese banks and the financial services system, so they don't care as much about some of the stuff. It's all interesting, so we got to play. What came out of the financial crisis are three things that are just wholly different, but aren't permanently different. One is people outside the tent were under the tent. So people forget that Countrywide, Bear Stearns, Lehman, even WAMU, these were not in the core regulatory framework. Now everybody is. So Goldman's a bank holding company just like we are, and Morgan Stanley and JP, so we're all the thing. That was one thing. So they said everybody that does this has to be in it. There's a lesson that when you start to think about cyber currencies and stable coins is, wait a second, if it walks like a duck, it is a duck. So one is everybody got in the same tent. Then they could see the liquidity and things like that. Number two was that everybody had the same set of rules and had to have adequate capital and had to be sort of tangible common company. And the third is the stress testing. So for the American public, the thing I'd say is look at the stress test. Every year they run a stress test. And what that stress test assumes is it's 10% unemployment tomorrow, that the stock market goes down 40%, housing prices go down 50%, commercial real estate is down 60%. And we throw all the banks in that with no preparation and act like they can't make adjustments, which we always do. And let's see how they look. And they pass it. That's different than in 2006 when none of that was done. That is the major difference because you're saying assume that we hit a pothole of immense proportions tomorrow. That happens. And then in our companies, behind that, we build a stress test regime that we all do. Now, that's not perfect because there's stuff outside our system. That's not perfect because the way their outcomes, they say this happens. How you get there might have a different impact than you think. So that's why we have to be very mindful of even the risk beyond that. But I'd say those three things, the fact that everybody's under tents, they can see the industry, see the financial services industry better than they could before. The second is the core capital levels are twice as high, to make it simple, even before the excessive nature of them. And the third is a stress test then gives you sort of an objective proof point that throw everybody in, let the teacher grade it. It's not like we have a lot of influence on how that comes out. We don't agree with the results. They're kind of wacky sometimes, but we're bound by it. And that's good. That's good for the industry. And by the way, that goes on in other countries too. So
where do you see Bank of America 10 years from now? When you think and look forward with all the different changes that you've seen and overseen, you've seen lifetimes of changes in 15 years and the speed that you just talked about. What's your hope and dream for the institution in the next decade?
In the end of the day, we'll be more international because of the globalness of, despite deglobalization and everything, large companies operate all over the world. They may have to operate differently than they'd like to because of tariffs and trade or factory locations or data locations, but they're operating everywhere. So we're more global every year. The second thing I think then we'll be the dominant player and have gone organically a larger size across the U.S. and the businesses we're in. And the third is we'll be a lot more digitally, whatever words you want to use, but it'll be a lot more technology as a higher percentage of the place. But what won't be different? Customer first. What won't be different? Focused on teammates and customer scores. What won't be different is supporting our communities. It won't be different is delivering, good, strong returns to our equity holders on a very consistent through the cycle basis. That can't be different because then you don't have a great company. So the brand will be better, but the brand can't be better at the derogation of making money. We can't make money and have teammates that are not happy with us. So handling all this change that will go on in people's psychology and in reality, in terms of the way the work processes flow, is one of the big challenges we have as a management team. So it'll be a bigger version of what we have today, a little more global, a lot more technology driving the bus, and products and services I can't think of. But at the end of the day, it'll still be based on a customer, a client, company, investor, a large investor, a consumer, serving their financial needs and doing it in a way that you keep building trust. Because if you don't have that trust, you won't be here.
You've invested a huge amount in the brand. You've spent billions of dollars making sure that consumers really understand who you are. You're involved in the Olympics, the World Cup, golf, all kinds of things, obviously as a business, marathons, etc. I know that giving back is a huge part of your life. You've lived it outside of the bank as well, personally. Do you think that it's looking forward that most institutions are going to be able to keep that at the center of what they do? Because in this world that we're living in right now, it does appear to be something that we're losing a little bit as a society. And I know it's been core to your whole value system that you bring to bear here.
I think capitalism done the right way never goes out of style. Which is you got to do it for the benefit of the shareholder and the benefit of the customer. You got to do it for the benefit of the shareholder and the benefit of the teammate. Because in the end of the day, we are a company that has 213,000 talented individuals, the computers they work with every day, the buildings to keep them dry, and that wonderful customer base. So if those teammates aren't fired up in great shape, and we're investing in their training and development, their curiosity, their flexibility, we're not going to be able to serve the customers. It's not like, so you have to make sure all it's in balance. I don't think that goes out of style. I think that's a principle that's been written about many years, talked about, but also you see play out. People can express it and the ability to have a brand live on long. Our communities need our support. If you go back, the start of this company was basically 1784 is the oldest part of it. Revere, Hancock, Adams. They started this bank because they needed to collect the assets and the deposits in the community, assets of the people, liabilities of the bank, and then lend them out to people to grow their businesses and have success. That's what we do. We help customers be successful by taking other customers of excess assets and deploying them for the people who need those assets to grow faster and run there's can never be anything wrong with that. And so I think the idea of shareholder primacy, all this stuff gets argued about at a given moment. But if you don't do capitalism right, you will not have a customer base at the end. If you don't do capitalism right, you will not have an employee base. If you don't do capital rights, your long-term shareholder value will start to deteriorate. That's the principle we're on. So it's not about a political position, it's about how to run the business the right way. Going back, especially in banking, which is different than some others, in the end of the day, we are a creature of all the markets we serve and how we serve them. And that's why we focus very locally and how we drive it. So we have this big international brand and they have this big, global presence. But when you get down to it, how we operate in Nashville to 90% of the people there. Yes, there's some multinational companies would think about other things, but to 90% of our customers by count, it's how we operate locally. And do our people carry the brand and do a great job? Do we have great products and services? Are we thinking about it from the community to us? That's why you have to do both. And it's an and, not an or.
The kid who grew up in Ohio, in that house teeming with 8 kids and all the things you said and, the upbringing that you had and all the various things that you had going through your life. Did you ever think that you'd find yourself in this position? And also, what advice would the Brian Moynihan of today give to the Brian Moynihan of 30 years ago?
You could never imagine you'd be here today because, like I said, I grew up thinking first I'd be a professional football player, that right at the height and weight and other types of dimensions. Then I thought I'd be a criminal lawyer, and that ran into practicalities, et cetera. So I never dreamed about this, and it never would have thought I would have done this. And so, but I think that comes to the second question, which is the best advice I give to people: stay curious, keep learning, keep thinking, because at the end of the day, your ability to think and be curious and learn more is what's going to make you successful. And it might be learning about the science of management. It might be learning about the Greeks in the trading book. It might be learning about wealth management, how to construct portfolios. It could be all that, but you have to keep learning about life. And then you have to learn about other stuff that affects that in a ways you don't think. And so if you're stop being curious, that's the mistake. And then the second point we talked about a little earlier, which is always take the chance when you get a break, when you get lucky. Think about how to take that chance. which requires you have a flexibility that you never do. I mean, I literally was out of a job in December 2008. The press release was going out because I eliminated my own job in a merger integration saying, we got to get rid of people. My job should go away. They flipped around and I stayed in the company. And a year later, I'm CEO. Think about that. 12 months, I go from literally the press release on its way out the door. That has to do with being a little bit flexible and putting up, but it was the right answer to get rid of my job at the time. We need to get rid of expense. So the idea that when young kids ask me, how do I go from, should I go to law school, be CEO? I said, it's irrelevant. You should go to law school if you want to go to law school. You should go to business school if you want to go to business school. Then after that, you'll figure it out. And the second thing is I always say, if you try to plan your life out into your increments for, 25 years of working, you'll be disappointed 24 of them. So just let it come at you, learn, show you can do good work, show you can work hard at it, show you can think about it, show you can add value to what the enterprise needs, and then be flexible when times come up. You have to, there was no logical thing you could put down the scorecard that said, stop being youngest partner ever in a law firm and go join a company in an area that you had never worked in. But it felt right. It was the right thing to do. And he then got the return on luck. And from there to here was a direct line.
This section of the show is called The Uncharted Path.
Okay.
Best piece of advice you ever got in your life?
To be curious. Just keep learning.
Who would you say was the biggest mentor in life and gave you the best advice and you reflected on it and acted on it?
The simplest piece of advice was when I was in constitutional law and the professor said, basically treat everybody like you'd like to be treated yourself. From a business sense, you have Terry Murray and the successive CEOs had Chad Gifford and then Ken Lewis and Hugh McCall and others. One piece of advice wouldn't suffice. Watching them, listening to them, having them talk to you is always important. So what you need is to absorb experienced people's advice from everybody, including you, and then process it and figure out what it means to you. It's dangerous to say somebody gave me a piece of advice because, frankly, a lot of people gave me a piece of advice which are very valuable.
How important is being Irish to you?
It's important. It's our heritage. It's who we came from. I've learned more about it, frankly, over the years, and I think it's been wonderful to learn about the country. Having played rugby, you got a little bit of experience there. I played rugby in Dublin. I also played rugby in Belfast.
Interesting. I didn't know that.
Yeah, I played against the Collegians in 1987 or 88, right when the Accords were being voted upon, and crossing the border when it was fortified. I think it's important because it's part of who we are, but I'm also part German. I'm part other things, but it's just such a persona that the world has about Irish people that it always is something to talk about and learn about.
What's one or two things about you that most people would never know, don't realize?
The funny thing is, after 15 years of doing things like this, there's not much left. People found out things along the way they didn't know, but look, at the end of the day, I think that the hidden thing that I have that I'd like to read, like, spy novels and stuff like that, which, a lot of people say, don't you read more intellectual stuff than that? And I said, no, these are fun. So I read them for fun. And I spend, so whether it's about Altitude, whether it's Ken Follett, or whether it's, you pick it, it's just good stuff.
If you could have done one other thing other than being a lawyer and being a banker and all the things you've done, which are obviously extraordinary, when you were growing up, apart from being a football player or rugby player, what would it have been?
An architect.
An architect.
My brother is one. I don't have the artistic talent, but I think the idea of, think of this building coming out from nothing and the design and stuff, and the idea of the engineering precision with the artistry, I just don't have the talent, but I admire architecture almost as much as anything I do.
I know your brothers are doctors, and you come from a very, giving family, and you've been closely involved in Haiti and Africa and other things. Talk a little bit about that, because I know it's early in your life and it's lived all the way through.
Yeah, I've tried to get involved in personally things where I actually can, have an impact. And so the project in Haiti came about where the thing was kind of coming apart, and they asked me to join a board and raise some money and get it going and guide it. Literally, we ran the thing for a while, and then my brother ended up running, did a wonderful job, and he still runs it today. But it was, they could have an impact. So a school, 30 kids in the class, developing that, and now 25, 30 years later, probably now, you've got kids that graduated, gone on to be, lawyers and doctors and business people in Haiti and the leaders of the country. But that's my goal, whether it was Youth Build in Boston or whether it was this. I was always, if I was going to be on something, National Museum of African American History, Culture, helping to raise the money to get, I always want to be on things you could actually have a personal impact on. We as a company support a lot of things. I could be on a lot of boards, but it has to be something I think I can actually add value to.
One piece of advice you got that you rejected and then said, I'm so glad I didn't take that piece of advice?
Well, the advice I always got is you surround yourself by young people and they do what you say. I always reject it because at the end of the day, had a lot of smart young people around. They beat the crap out of me. And so what looked like they were always doing what I said on the surface, they were actually behind the scenes saying, you are dumb, you don't understand this. And they were just unabashed in their opinions. And so especially as you get more senior, you need to have people who will speak truth to power, as the saying goes. And that tends to come from people who don't know better. But I had people around, well, you need to get a lot of, people my age now around you. So you because you're a little brash, a little thing. And I rejected then, and I still reject it. You have to understand young people are going to challenge people, and they're going to be irreverent, and they're going to be a little funny, and they're going to be a little off-putting, off-center and stuff, but that's all good.
Thank you, man.
Thank you.
I really appreciate everything.
Good to see you.
Thank you very much.
Thank
Brian.
you.